Yep, morning to you. 17 minutes past 10. So this morning, headlines suggesting hard times ahead for households. Again, Daily Mail suggests annual payments on a £300,000 mortgage could rocket by £13,200. The Financial Times reports that one of the UK's biggest mortgage lenders, HSBC, is poised to raise rates on some products for the second time in a week. Well, Malcolm Davidson is a mortgage broker in Hull. We always seem to get you in whenever there's kind of like looming bad headlines.
I don't take offence, don't worry.
It's all right. One day we'll call you in when there's good news. So let's try to make it as simple as we can, because we can get overly complicated when we talk about mortgages. Why is there so much concern about mortgage rates at the moment?
Well, it's because inflation is not coming down as quickly as everyone had hoped. So these forecasts that we'd get down to the normal levels by Christmas have now proved to be optimistic. So your listeners will have seen every single week the cost of the weekly shop going up, and that's continuing. So inflation's gone down from about 10% to about 8%. So it's coming in the right direction, but not as quickly as we'd hoped. As I mentioned on the show before that, I think personally that the Bank of England were very slow to react to this in the first place compared to some other countries. So that's where we are, and everybody knows that. So the banks, when they're pricing their fixed rate mortgages, have to take into account these forecasts and what they think is what price they're going to have to buy the money in at to offer these fixed rates. That's not looking as optimistic as it was, and therefore the fixed rates that we've seen where they've come down, to be fair, it was horrific at the end of 2022 and rates came down to about 3.99 a couple of months ago, have spiked back up, and we're now seeing rates back up, not quite to those levels of the Truss and Kwarteng budget, but getting that way. So we're kind of not unusual now to see 5%.
Goodness. So, what do people need to do then if they're coming to the end of a fixed term mortgage?
So the advice here has changed a little bit since the last time I was here, because it's looking like the trajectory for fixed rates is up, and some lenders will let you fix up to 4 to 6 months before your deal is coming to its end. So I think the education piece has pretty much been done, so people are not ignoring everything that's going on. It's in the mainstream media. So the advice now is to reach out to a broker actually 6 months before your deal expires, because we can lock you in to a new deal with your current lender. And at the moment, we're offering this as a free service to people, just so they can lock into something now. They've got something, because you can cancel that fixed rate with some lenders. And that's why we're saying don't do it yourself, come to us. You can do it with some lenders and cancel it prior to your deal coming to an end. So it gives you a second bite of the cherry if the interest rates come back the other way before your fixed rate actually expires.
Okay, so how about if you're just getting your first mortgage, a new mortgage? The story suggesting that lenders are actually getting a bit nervous and withdrawing some mortgage products.
Yes, that's true, but they're relaunching more expensive ones. So they are coming back out. In terms of first-time buyers, well, there's a phrase, it's better to wait and buy than... it's better to buy to wait than wait to buy. So I've just confused your listeners even more there. So what that concept means is you never quite know where in the cycle we are in terms of property values. Okay, so it might be that you buy a property now and you can afford your mortgage, but it goes down. But history suggests even those people that bought in previous peaks, if you held onto your property long enough and you can afford your mortgage, you didn't lose your job or get ill or get divorced or whatever, then you'll make money in the long run. So you've got to compare it to what your other options. So yes, you could stay living with family if you're a first-time buyer. Most people don't want to do that forever. Or you could go into rented accommodation. Well, it's not like the news on rented accommodation is getting any better, because your landlord's mortgages are going up as well. And those costs of private renting are escalating just as quickly as mortgage payments.
I did hear somewhere, and I don't know if I'm right with this, because my eldest is now trying to get on the property ladder. He's been renting for a couple of years, an awful lot of money, on the rental market, and an awful lot of people trying to get on the property ladder. Is it still as difficult as it used to be? I did hear that some mortgage companies are actually taking into consideration rent paid, meaning that because a lot of people will say, look, I can prove I've paid my rent, on time for 2 years. Why can't you take that into consideration? Is that an actual thing that they are considering?
Yes, so that really should be the measure, shouldn't it? Really, so the scheme that you're probably referring to is this what the Skipton said, where they run the normal affordability assessment, but they'll let you not put a deposit down, so they'll lend you 100% mortgage again. So there was a bit of sensationalism in terms of when this got launched, but actually only a small number of people qualify, because what they're saying is, if you can't put down that deposit to reduce our risk as a lender, then we're not going to allow the mortgage payment to be any more than the rent that you've been paying. And that's quite sensible, isn't it? Because you've evidenced that you've been paying the rent for like a year or more, and you've not missed your rent. You'll get a reference from your landlord, or look at your bank statements to show that you've been paying the rents. So the market is moving towards that, where technically that rent, it should be, because it's most people's biggest outgoing. What better gauge could there be as to whether or not you can afford a mortgage?
So, I mean, what's all this news going to do to the housing market? Are people just going to wait where they are? Is it just going to actually end up with people just not being able to move, just deciding, that they just simply can't afford it?
Well, people always have to move for various reasons, because they're relocating with the jobs, or they're growing their families, or separating. So that people will always kind of have to move. What the property market doesn't like too much is uncertainty. And we've seen this time and time again, especially over the last 3 or 4 years with Brexit and COVID and the mini budget and Ukraine, cost of living crisis, and where do you want me to stop with this? But the market proves itself highly resilient, okay? Because despite all these things, this predicted crash never seems to happen. And that includes a period after COVID where property prices spiked by 20% because the government stoked things up by doing a stamp duty holiday. So even after the back of that 20% spike, yes, prices have leveled off, if not dropped slightly, but we haven't gotten anywhere near back to those levels that we saw pre-COVID. So it tends to be an investment that people are addicted to in this country, and I don't see that changing.
So some people might be listening and thinking, I am actually going to struggle to be able to afford my mortgage repayments. What's your advice in the very first instance, as soon as they know that they might actually miss a mortgage payment? What should they do?
So the first thing is to not bury your head in the sand, okay? Because your lender is obliged to treat each situation sympathetically. So if you are in that position, the very first thing that you should do is engaging with your mortgage lender to see if they can come to some sort of arrangement where they can reduce mortgage payments for a period of time. However, you must check with them whether this is going to affect your credit score, because obviously if you're going to be paying a reduced payment with the permission of the lender, there's still scope for them to be marking that down as arrears on your mortgage. That is regrettable, but better that than completely ignore the situation and end up with a repossession.
So it's like you said before, communication is key. Don't bury your head. Just get on, pick up the phone and say, listen, I'm struggling here.
There's a bit of shame and embarrassment to all those things.
Yeah, of course.
But the last thing a lender wants to do is take possession of a property. It's a bit of an urban myth that the bank will just get their money back. They don't want to do that, okay, because they've got to deal with it.
It's a lot of hassle for them.
It's loads, and it's so expensive. They've got to get rid of the owner that probably doesn't want to move out. They've got to secure the property. They've got to insure it. They've got to list it with an estate agent. So it's a real load of hassle and expense to them. So that's the last thing they want to happen, and that's the last thing everyone wants to happen. It's the last thing the borrower wants to happen as well. So
it's in their interest to actually help the mortgage holder. Yeah. Is there any help that we can get from the government with regards to mortgages, whether that's existing, fixed rate, new mortgages?
No.
Simple answer to that. Nope. Sorry.
Yeah, there's nothing in that regard. The only thing you can do, again, if you engage advice here, is to compare the deal that your lender is offering you with all the other deals in the market. So there might be a slightly cheaper deal that's available elsewhere if you're coming up for renewal, but don't expect to be saving £100 a month by swapping.
So as you said, the advice is with these interest rates, particularly with the fixed term mortgages, 6 months before the end, get on the phone to a mortgage advisor, have a chat, see what can be done sooner rather than later. That's
exactly it. And like I say, it's a free service that we're offering, but you need to take action. Don't leave it to the last minute.
All right, Malcolm, thank you so much. Always a pleasure to talk to you, whether it's invariably usually always bad news, but we will get you in one day when it's good news. Malcolm Davidson, then their mortgage broker in Hull. Thank you.